Hey everybody, it's Axe with a Cake Trades Weekend Update. Today is May 14th, 2022, and the week starts on the 16th, May 16th, 2022. And I want to talk to you real quick about sort of the market structure going into next week. I made some comments that we're sort of completing a zigzag. We're in the middle of a bear impulse, and we may see a rally that's muted. But I want to sort of correct some of that because looking at this chart over the weekend, I see what I think is a completed bearish impulse. I've got a ES open on the 4-hour chart right now, and typically, an impulse in Elliott Wave. And again, I apologize to Alex, who's really the Elliott Wave master. I apologize if I butcher his craft here, but I find that it's really helpful in generating targets and expected or measured moves. In this case, it's a pretty clear 5-wave impulse. We have and normally you'll see the one. So we have one down, 2 up, 3 down, 4 up, and the up are sort of what we call the retrace, and then the 5 down, right? And typically you'll see like the 1 and the 3 match, where you'll see like a large 3, but a 1 that might match the 5. But in this case, I've noticed, and this has happened on crypto as well, and some other moves on other indices, where basically the 3rd wave and the 5th wave match. And that just goes to show you the power of these impulses, how strong they've gotten, sort of as the rallies get muted and sort of snuffed out, and they happen really quick. This was that Fed FOMC move. We rallied up and then bam, sold off. But so as these impulses pick up steam and the fear and capitulation happens, you can get a case where the 3 and the 5 match. So anyway, we basically have a 6% move down to start this impulse, and it sort of hit this support level and bounced. And I think a lot of people thought, and myself, I was hopeful that this was going to come up and break out. Instead, we set a lower high and generated the next wave down, and thankfully the PCRIs kept us safe there. But so basically, we had a 10% move down, and really, if you want to draw this out, I could probably draw it out in like another Elliott Wave 1, 2, 3, 4, 5. This move up here retraced the 5th, and basically came down to start a new. This is like an ABC. So we have like when you hear me talk about a corrective, we have an ABC. Okay. And I apologize for all these lines all over the place. You're just going to have to get used to it. So we have the ABC down. That's the corrective. And that started the next impulse down, which was our 5th wave. So you could say like 1, 2, 3, 4, 5, right? Okay. So now we have, I'm going to just get this out of the way here. We have basically nested impulses within a larger impulse. And you're going to see, if you assume that this area here, this 4,300, is where the 5th wave began, 1, 2, 3, 4, 5, we're going to A, B, and this A wave could be higher, A, B, C, and we could come up a little bit higher here. I'll turn these back on and just delete some of this stuff for you guys. And go back to the beginning. So we've got a 1, 2, 3, 4, 5. Okay. So what you'll see is always this 4th wave is retraced, and that's sort of what happened here. We had a 1, 2, 3, 4, 5. The A wave of this corrective retraced the 4th here completely, and then came down to set a new low, and then we finished at a C, which is where the 4 started. So my point is, we're going to retrace this 4th. To this 4th wave completion. It could happen where we do something like this, where we come up here like that. It could happen where we come down and go up. I mean, there's a bunch of different ways it could come down, like, I'm just sort of freestyling here, but essentially the A wave could come down a little bit below this area. The B wave could create a lower high, and then that could be the final low. And the C corrective maybe starts a new impulse, right? So you could see something like this, where we go A, let's say down here, double bottom, and that's, I think, the ideal situation. And the C let's just say we start a new impulse. Okay, so something like this. And again, I apologize, Alex, for butchering it, but let's just say we do something like this, and now we're up here, right? So that could start a new impulse higher, which would give us a double bottom breakout and sort of this W formation here. Or we could see something like, let's just say we retrace this. And I usually use this large area of reference, so like 4135 to 4300, because sometimes this retrace fails. But you can see even in this tough market conditions, we've retraced it completely. So I would say we have to hit 4,300. Now we could put in another double bottom, like I said, but 4,300 is going to get hit, and it's going to get hit sometime in the next week or two. But what could happen is, if I zoom out here, and this is the fear if we're going to go lower. If we retrace this, we could start doing something like this, right? And that's how we end up going lower. But to zoom out, if you look at this corrective, it's basically a double zigzag. And a zigzag typically is a corrective period in a bull market. You can see we have 14.6% there and about 16% here. Okay, this pretty much, if this is all this is a large corrective in the form of a zigzag or a double zigzag on this bull market run, then this could be the end, and we could double bottom out of here with, like I said, with that ABC corrective. So what I'm looking for into next week, basically, we've completed this impulse. We know we got to get to 4,300. If we fail at this resistance of, let's just say, 4130, we know it's probably going to come down here, and my guess is set a double bottom. So look to 4130. If we fail there, look at this 3860 zone. Again, this is ES, and look for a double bottom or coming down on this channel a little bit further, 3820. If I zoom out here, we have, let's see, we sort of filled all this. We sort of hit this wick. We could come down and, it could get really bad and we could start targeting these wicks, but I think that's too big for this ABC corrective. So I think you would look to 3840. So again, if we fail at 4130, look for a double bottom or 3840, but we've got to get to 4300, right? So we know 4300 is going to hit in the next couple weeks. And from there, we're looking, if it's a small retrace, let's just say a retrace of about, let me see how big these moves were, 3%. So let's say we get to 4,300 and we retrace to test this support, which is probably a pretty predictable move, 4,140. And that holds. We know that we could be on our way out of here with the impulse. And that doesn't mean we're going to break out, but we could at least target this zone of like 4,480 to 4,500. So we would come up with another impulse to get to there, and then we're looking for a breakout. Once that impulse completes, though, remember we got to come down and retrace the fourth. So basically, I see a couple of different paths. Right, that's probably our initial move or something to that effect. It could be a little bit like that, but let's just say for the sake, we're going to get to 4,300. So now this is going to take us lower, and then we know from here we're going to retrace this, and that's going to be pass fail. So it really comes down to this move to 4,300. 4,300. Do we come down here and retrace and get higher, or does this break down? If 4140 holds, bearish impulse lower. We know we're going lower, and the next wave is going to continue. And this one was from the end of March until May, so that was basically 6 weeks. So we got 6 weeks of hell coming. If this holds, we're waiting for like 4,400s to see what happens there. We know it's going to come down and retrace and retest. Does that hold? If so, we bounce and there's a strong transfer, we break out and it's done. If it fails, then we probably start a new impulse lower to the bottom of the channel. So that's where I'm at in the state of the market. You could apply that to NDX. You could apply it to the Russell 2000. You could apply it to the Dow. But I'm watching ES because ES, has the tech, but it also has the rotation stocks as well. So we want to see how this performs, and those are our levels going into next week. I think it's pretty straightforward. We're going to continue to watch the indicators and see what they tell us. I'll do a separate video for that here shortly. But I wish you all a good week, and send me a DM or a chat reply if you've got any questions. Thanks.